we held through fluctuations, entering the trade Monday, August 15th. We were able to exit the trade at our take profit Friday, October 7th. So we were in the trade for less than 2 months. And I have to say this. So in this video, I'm going to be talking about the Australian dollar CAD and how I was able to hold this trade for over 300 pips for a few months. When it comes to catching a trade like this, a trade where you have to hold it for a few months, a trade where you can catch more than 100 pips, more than 200 pips, you have to understand a few things about the trade. The first thing you want to understand is the trend and the time frame that you can find the flow of fluctuations from. So I'm going to have to take you guys up to a higher time frame. Here on the weekly time frame, I want you guys to just notice the exchange trades. Now, I got asked this question from one of my YouTube subscribers who asked, do I have to go up to the monthly time frame? Can a weekly time frame just be enough? And I'm paraphrasing the question. But yes, the weekly time frame can be the highest time frame that you start with. There's no rule that says you have to start with the monthly time frame. I also got asked this question from another subscriber. Why did you stop using support and resistance? Because it seems like my strategy has changed over time, and he is absolutely correct. My strategy has changed a lot over time. I used to be a support and resistance trader. Now I barely trade with support and resistance. Well, I don't at all. I don't trade with trend lines in the conventional sense. What I do is I just use exchange trades, and then I just use one zone to enter a trade. And I only change or update my zones if price makes a new low for a lower low in the downtrend or a new higher high for an uptrend. That's the only time I update my zones, and it just makes it easier. My charts they don't have clutter. I can actually see the flow of price. I'm not looking for a pattern in the market. I'm just looking for a trend. That's it. Just direction, changing direction. So as you guys can see here, price went from 0.89 cents up to 0.91 cents, down to 87 cents. And when price began to retrace, pull back or correct, I wanted to know, okay, where could price pull back to so I can enter the trade for a sell again? And then once price got to my estimation zone, that is when I started to ask, where would I want to enter the trade? And so when it finally got back to my zone, when I applied in my zone where I wanted to enter the trade, that is when I dropped down in time frames. So I dropped down to this time frame and price came back to my zone. And I want you guys to notice the candlesticks that form. So I'm a person who likes 4 candlesticks, that's it. And they're in categories. So you have the rejection candlestick category, you have the engulfing category, and then there's a spinning top and bottom category, and then the doji confirmation candlestick category, which is the doji candlestick in one of the categories that I just named. I only need one candlestick to enter a trade. I don't look for different names, the kangaroo tail, the dragon, the evening star, morning star. I don't, because those candlesticks all look the same. The only thing that changes is the length of the wicks and the bodies. And so as long as I can name a candlestick out of my 4 categories that approach my zone, it really makes trading a lot easier and simpler. And that's what I was able to do here. And so looking at this candlestick that formed, I entered on the bearish candlestick. To me, it looks like a spinning top because it looks like a candlestick in the middle of 2 equal wicks. And that is a form of price wanting to stop the momentum and change it to the opposite direction. And so I was able to enter this trade. And me and my trader friends, and we were able to enter the trade back to the downside, back down to the low here, around 87 cents. We were able to hold this trade for quite some time. Now, before we entered the trade, there were a few things that we knew about the trade. One, price was in a downtrend, which means that we wanted to trade back to the lower low. We didn't try to find different areas to exit the trade, different areas to take profit, different areas to place different structures. That's not what we wanted to do. We wanted a clean and clear sign of one direction that price could move in, and as long as we're profitable, we're going to hold the trade. That's why we use the weekly time frame to scout out the exit and the entry before we drop down the time frames to actually enter the trade. The next thing we wanted to look at was the condition of the trend. The condition of this trend is very broad. One of the reasons why I say that is because the distance from where price pulled back was from Wednesday, July 13th, all the way up here to the entry price on Monday, August 15, 2022. So that's a month worth of movement. The reason why this is important is because in my mind, if it took a month to get here, And that's waiting a month of not entering a trade to the downside. It could take more than a month to actually go back to the downside. Sometimes it takes less, but a broad market condition just basically means it's going to take some time for price to go our way, especially when we realize that we could get 300 plus pips out of the trade. We already knew this was going to be a slow money maker, so there was no rush to always keep updating our charts, to keep moving things on the chart. We just knew price was going to fluctuate. How does it fluctuate? How would it have fluctuated? We don't know. No one ever knows how the market will move after they get into the trade. The only thing that we needed to know was the trend, the condition, and that we were going to hold this trade for quite some time. We didn't know we were going to hold it more than a month, but that was okay because as long as it's in profit, it's making us money. So when price got around this area, I was around 86, 88.6, 88.5s. Say, okay, let's move the trade to break even. There's no reason for us to sit here and worry about the trade. We're just going to let it run. And that's exactly what we did. So break even just basically means you move the trade to the entry exchange rate, or the entry price, the price where you entered the trade. That way, if price pulls back, it's out of sight, out of mind. We're not going to lose money on the trade. We could make a little bit of profit if we move it a little ways in profit, but either way, we're fine. And so we moved the trade down to break even and some in profit, and price did pull back. But as I've stated, moving the trade to break even in profit is basically a mindset thing, and it gives you a little bit of peace knowing that no matter what happens, you can't lose the original amount that you risked on the trade anyway. So we held the trade, we held through fluctuations, entering the trade Monday, August 15th. We were able to exit the trade at our take profit Friday, October 7th. So we were in the trade for less than 2 months. And I have to say this, it wasn't really a bad trade at all. This was actually a really good trade. And I'm happy that we've been able to add this to our portfolio of long-term trades. I've had quite a few good long-term trades this year. I'm looking for more before the end of the year, and I'm really excited. Now, one of the things that I have changed in my portfolio ever since this trade was how many pairs that I do trade, so I can focus on smaller setups as well on the 12-hour and daily time frame. I'm going to share one with you guys now. So one of those setups that I am really excited about is the Australian dollar, United States dollar. One of the reasons why I'm really excited about this setup is because price just made a new lower low. So last week, one of my students asked me, Shaquana, do you think AUDUSD is ranging? And that was when price was in this area. I told her to give it a few days. Either price is going to continue to go up and pull back, or she's going to make a new low. Last week on Friday, she made a new low. So this led me to believe that if price keeps going down and once she pulls back, I'm going to have an amazing risk to reward. So I already have my pending order set. I know my stop loss. I know where I want to enter the trade. Now I'm just waiting for price to pull back, because once again, just like AUDCAD, there's a lower low, there's a lower high. Price has made a new lower low. The only difference here is I don't know how low price wants to go, but I already have my setup. I can always adjust my take profit because I do have this set as a pending order, because I don't want to be the one to manually enter the trade. I really just want to be triggered in the trade if all of my rules are followed. I've been having really good success with pending orders lately. And it does eliminate time. The only time I really have now is just analysis time. My trading time has been cut down in half. And that has been such a beautiful thing, to where I'm now not inclined to keep a trading schedule every day. The trading schedule I used to have is kind of kaput now, since I don't have to worry about entering trades using we're using pending orders. So with that being said, I'm going to wait until price starts to pull back, and I'll monitor this a little bit more. But until then, like I said, I already know my stop loss. I already know where I want to enter the trade. When price starts to pull back, I can adjust my take profit. I'll modify my order, and then we're just going to let it go. Now, another difference with this trade is that it is a narrow market condition. Narrow market condition means that it doesn't take time for price to pull back. You guys see where price is now? If price pulled back, it may not take a month or more than a month like it did Australian dollar CAD. This could take maybe 2 or 3 days. If there's some type of fundamentals, it could take a week. But either way, this is a trade that I can get in faster. Also, this is a trade that will take profit a bit faster. It could be 2 to 3 days, it could be a week, but it won't be less than 2 months like we did with Australian dollar CAD. So once again, knowing what to expect before you enter your trades is such a beautiful thing, because you're gonna have a little bit of a peace of mind when you're going into the trade, kind of like an expectation, even though we never know what's next, but it does make it easier to trade when you understand the key things that you're looking for with the setup that you have. This takes a while to learn. Definitely doesn't take years, but it could take a few months to learn. But I hope you guys like this video. Congratulations to everybody who did take this trade. As a matter of fact, there was a YouTuber who did take this trade, and I want to big up you and congratulate you. To my students who took the trade as well, I'm very proud of y'all. And for the ones who were able to stack positions on that trade, kudos to you guys as well. I'll see you guys in the next video.